Hello and welcome to the Global Dialogue. I'm Shereen Bhan and we're in conversation with the Managing Director at IFC, Makhtar Diop. He's been MD since 2021 and is spearheading IFC's efforts to invest across asset classes and across 100 geographies. Joining me here on the program today, Mr. Diop, many thanks for joining us here on CNBC-TV18. It's an absolute pleasure to have you with us. Let's start by talking to you about India because this is day 5 of your India visit. Take me through the snapshot of the trip so far.
It was an excellent trip so far, and I met with the Minister for Finance to discuss a little bit what IFC is doing, and it was very impressive to see how the priorities set by the federal government were aligned with what we want to do in India. And as a result of it, actually in the last 2 years, we have tripled our commitments in India, and India is the largest portfolio of IFC worldwide. So that just to show for us the importance of India. But what is interesting in our portfolio in India is not only that we are lending with the debt, but we are doing a lot of equity. And equity means that you trust the country, you trust the company, and you trust a long-term engagement with companies in India. So, and the way we are doing it is that we are focusing in areas where we think that we can bring a lot. One of them is climate change. We know that climate change is affecting the world, affecting companies in India. And actually, we have a very large portfolio of investment in climate change, and we will be actually doing some signing already in that context. For instance, we have been among those who have launched the first green bond in India, but now we are entering a new era which is blue bonds, but also we are doing a lot of things, last mile, EVs, and we are also working a lot on inclusion. Gender is very important for us. So we are helping companies to improve their policy in terms of inclusion. And we are actually planning to put here in India a hub which will be focusing on women entrepreneurship to learn from the experience in India and to try to share with the rest of the world, but also to try helping investors, women investors. And right after this discussion, I'm meeting a group of PE managers, exclusively women, who tell me what they need and how we can help them more.
You've given us a very comprehensive view of the engagement in India. Let me unpack some of that. As you pointed out, you've of course been long-term investors in India, going all the way back to 1958. You talked about tripling your investments in India. What's the outlook over the next few years? In fact, I'm given to understand that the IFC could invest more than the World Bank itself over the next few years.
Actually, we are already investing more than our sister organization, IBRD, the World Bank. It's because the need of the private sector are important. And we are talking about a country who wants to be the third largest economy in the world. And that will be driven by private sector investment. We have a country who wants to be a $5 trillion economy. We have states who want, I just came from UP. And in my meetings with the chief minister, it was clear. We want to become a $1 billion economy, $1 trillion economy very quickly. So the private sector will be the driver for this effort and exercise. So we'll be focusing now not only working with the traditional part of the country which have been growing very fast. We have been attracting a lot of private sector investment to look also at states which are trying to catch up in terms of income per capita compared to the rest of the country. So that's the reason why I was in UP and I had a very good conversation about asset monetization, about supporting the priority. Agriculture is very important. This is a basket of India. I met a lot of ag-tech companies, startup, but also a lot of innovator. And we'll be putting a SWAT team, we'll be working very closely with the government of UP to be able to develop. And I would like also to extend a little bit further for the next closer state to be able to make sure that we have convergence, economic convergence across states in India. And if you manage to do something which is transformative in UP, you are affecting the whole of India.
Absolutely. It's a challenging environment. The global environment is going through a significant amount of volatility. Of course, geopolitical tensions and geopolitical pressures adding to the concerns and the challenges. Does that make it harder for the IFC to try and mobilize private capital, private investments? I mean, you've had a record year in FY24, $56 billion, up 28% year on year, on track to the $62 billion target?
Yeah, on track, and I think maybe more. And I have a wonderful team, and there's a team in My team in India is doing a great job, and I'm very proud of what they're doing. And I think that we'll be able to reach that target. And in fact, in the last 3 years I've been here, we've been able to double the annual commitment of IFC in 3 years. So we are in a right trajectory, and we will be keeping it and accelerating it. How did we reach that goal? It's simplifying. You alluded to it earlier. Simplifying, removing the bureaucracy. To be candid, a few years ago, people were telling me, "Okay, Makhtar, IFC is a diamond. Your products are perfect. Your staff and your team are excellent. But sometimes you can be a bit slow, or sometimes you can be a bit complicated." So we took this feedback very seriously and tried to work on it by doing a few things. First, giving more responsibility to people on the front line. So we increased the ceiling for the decision making by regional director and regional vice president. We reduced the number of projects that was sent to Washington for decision. There is a committee that I'm chairing for the largest project and the more complicated one, and we wanted to bring as little as possible project at this level, to bring really the complex projects that need decisions. The rest, I trust my team to make decisions, and this is the way we can be efficient. So we've been able to do that without a significant increase of our budget. Basically, in real term, our budget have basically not increased, and that's this kind of efficiency. We want also to use technology more and more. We are pushing to use more AI in our operation, so that we can reduce the manual transactions that we are having, which are time consuming, and use the time that is saved by staff to increase the interface with our clients. So this is a revolution that we are putting in place, and that's what allows us to double in 3 years what we are doing without increasing our budget. But also what I hear from my colleagues is a higher level of satisfaction, because you spend less time in bureaucratic processes and more time talking to your client, working with them, and innovating, because it will be. Now we ask a question, how is the world right now? The world is complicated. And actually we had last week, just after the UNGA meeting in New York, a meeting in Bretton Woods. Okay, it was Bretton Woods 80. So Kristalina, the head of IMF, and Ajay Banga asked the managing director and a few selected people to come and say, what will be, after 80 years, what's the direction that Bretton Woods institution need to take. It was clear that there are some major risks, climate change, geopolitics, and so forth, but also the level of cooperation, the way it existed at that time, maybe is not necessarily reflected worldwide.
Correct.
So in that context, as to how to find a consensus around a certain number of issues. What came very, very strongly is job. All countries being low income, large income job is very important. So a lot of our focus will be in investing in area where we can create job, but also quality jobs. So that's some things that will be important. Second, when we interact with a country, with who are we interacting? Is it only the government? Is it the society at large? How to bring consensus around difficult choices? This is also questions that people reflected on, learning of the lessons of the last 20, 30 years. So the third element was that everybody agreed that the private sector will be the engine of everything that needs to be done. So how to rethink the architecture of these Bretton Woods institution to link them much more with the private sector activities, with the capital mobilization, and just to change a little bit the paradigm from being mainly institutions who are thinking about the sovereign, the public sector, to institutions we are also helping and realizing that the growth targets that they will have will be coming from the private sector. That was an important point of that conversation that Ajay and Kristalina are intending to pursue in the coming month.
This trip, you have decided to go forward with your first inaugural blue loan, which you're giving $500 million to Axis Bank. Take us through that and what the aspiration is likely to be on that front, particularly from an India standpoint.
You know, we are very proud of it because IFC was among the precursors of the green bond. 10 years ago, we are among those who started really developing this asset class, making sure that we help people think about the challenges that we were facing. Just think about it. At that time, 10 years ago, people were not really focused as much as they are today on climate change. We anticipated that it was a challenge that the world will be facing, and we developed instruments and green bonds, and since then, green bond became something quite important in the market. But what is also important is that when we did that, and we did that through the Sustainability Banking Forum, we set standard because investors wanted to make sure that the investments that are labeled as a green investment are really a green investment. So the knowledge that we have developed in it, the criteria that we have developed are now widely used by the market and becoming actually the main way of financing it. Similarly, last year we launched a guide on blue bonds. We did it in collaboration with the UNEP, which is a environmental program.
Yes. And
we launched it at the COP. And it was an important element because it allows now company who wants to issue blue bond to have a guideline, to know how to do it, what is blue, what is not blue. And that's what we use that knowledge in India to launch the first blue bond, which should be merged a little bit with green bond for Axis. And we are very proud of it because if the market reacts positively to it, and it seems to be the case, we will have a lot of a new asset class that can be developed, a new thematic bonds that will be developed. When you think about blue in the context of India, everything is water in India,
yes.
If you want to think about it. So there is a lot to do on marine plastic, on sanitation, and on clean water, and name it. So the sky is the limit if you want really to push in the private sector solutions that are addressing some of the important challenges that the world is facing in that area. In December, there is this One Planet, there is this summit in Saudi Arabia on, and we would like to take that opportunity because there will be a session on the One Planet Summit on water that President Macron has been launching. And we would love to present the experience of India and to take that bond issuance as a good example of what we can do at scale with other companies in the rest of the world.
Well, that's good to hear. But, since we're talking about climate financing, globally, what do you believe is the need today and where are we in terms of the current shortfall? And even from an India point of view, given the growth aspirations as well as the aspiration to be a developed economy by 2047, what will be, in your assessment, the need in terms of financing and where are we today in terms of shortfall?
When you think about the financing, the climate financing, I was also involved in COP21.
Yes.
So COP21, it was a conversation between NGOs and government. Private sector was mentioned,
but not involved.
En passant, as they say in French. And it was not really at the center of the conversation. COP26 was a big step forward. For COP26, you had private sector, philanthropy, and government starting to say, we cannot work in silos and each of us trying to move this agenda. And more importantly, government realizing that the big investments that are needed to tackle this challenge will come from the private sector. Right. And therefore, they need to be taken into account. And so COP28 was, so some commitment was made in COP26. And in COP28, it was materializing some of these commitments. I must say that the UAE has really made a huge effort and mobilized a lot of resources around the financing. And actually last week, when I was at the UNGA, there was a meeting called by Altera to mobilize billions of dollars to de-risk investment in climate change. So not the challenge, but the new paradigms that need to be strengthened is to be mobilized as much blended finance to de-risk investment in the climate change, particularly when it comes to adaptation. because often adaptation, project adaptation have a rate of return which is lower, but have a very high social rate of return. So we need to link, to bridge the gap between investors thinking about private return and the social return that you can get by addressing some of these. And that is the role of a blended finance and the resources. So if we want to catalyze and mobilize these billions, we need to raise a much more blended finance, and that's what we are doing. To link it to the work of equity that I mentioned earlier, right now we are in a process, and this is something that Ajay Banga is pushing us to do, is to have a fund that will help smooth the variability and that you have on the equity market. And a lot of this money will go in climate change related investment. So as we know that there are a lot of fluctuation on the equity market, in emerging markets, you need to have something to smooth that at a buffer. So we are in a process of preparing a fund that where IFC will be putting part of our income, but also crowding in income from philanthropies and others to be able to attract more equity, which has the best leverage in terms of investment in climate change, but also in other sectors.
Just on the back of the visibility that you have in India, the pipeline that you are currently working with, as well as the priority areas that you intend to work with, infrastructure, EV, so on and so forth that you talked about, what could the investment number potentially look like over the next 3 to 5 years?
I have my KPI with the team, so they know it. But I think
go public with it.
No, but I think that it will depend a lot on the mobilization numbers. The flow will be 5 billion a year. Okay, that's what 5-6 billion. And my team is looking at me with big eyes, saying, well, what is he saying? So the flow will be that. But I think that if we think about mobilization, we can have multiple of that number, a significant one. What does it mean? For instance, today we had a conversation on asset monetization with the Highways Authority. So these, they're talking about bringing $3 billion a year of asset to be monetized. If we manage to work with and be a preferred partner in that exercise, the number will be taking another dimension. And we are seeing a certain number of opportunities of that emerging. So I don't want to commit too much on that, but the direction is to say, the flow is 5-6 billion in the current setting, but with some of the new opportunities that I'm seeing in terms of asset monetization, it might be a much larger number.